these shares are at 52-week highs. So the question is there any upside left? Hi, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. Thank you for watching this episode of Market Trends. If you're new here, be sure to hit that subscribe button and turn on notifications so you never miss out on my best trading ideas, which I share here each and every week. Okay, so right now, Russia's invasion of Ukraine has been holding global markets hostage for the past couple of weeks. You know, the Russian stock market and the ruble have both been obliterated.
A full-scale invasion, the likes of which we haven't seen since World War II.
And while we are seeing the broader market sell off amid the Russian invasion into Ukraine.
Meanwhile, in the US and Europe, equities have seen increased volatility. But one of the most noticeable impacts has been seen in the skyrocketing price of crude, which is now over $100 per barrel. Today, I want to talk about another sector, feeling the impacts of this invasion. And as we've seen with energy stocks, this has driven shares of companies in this sector to new 52-week highs. So the question is, do you keep buying them or do you cut and run?
I'm not giving up, and neither should you.
Okay, so when we enter these periods of heightened volatility, investors get scared and they get panicked, and a lot will kind of flee to the sidelines or move into treasury, some sort of safe haven. Well, I want to focus today on talking about the fact that there are companies during all of this volatility that are hitting new 52-week highs, and these are solid, great companies that were in a good position before the invasion and are even in a better position afterwards.
I am inevitable.
So we're all well aware that, the global energy market has been feeling a supply squeeze. This is also true in semiconductors. But there's another key sector suffering a supply shortfall that's actually getting worse, and that's fertilizer. The global potash market is seeing demand outstrip supply. And believe it or not, that's not going to really end anytime soon. The shortfall on this actually begins long before Russia invaded Ukraine. The company I want to talk about here is the Mosaic Company, ticker symbol MOS. This is one of the leading producer and distributors of crop nutrients. This includes, feed ingredients, concentrated phosphates, potash, and, two related sort of agricultural products. Now, back in mid-2021, the company was forced to close, two of its potash mines in Saskatchewan 9 months earlier than anticipated due to flooding. The company was planning to close those because of just the imminent risk. But last year, these water inflows, exceeded Mosaic's ability to pump it out, right? So it was a better safe than sorry sort of step to close them down. This had, global ramifications.
Is it me? Am I the drama? I don't think I'm the drama. Maybe I am.
Right? Mosaic produces 13% of the world's potash. These closures reduced the global potash supply by 1 million metric tons. Now, this is being eased at the moment by production at the company's, K3 mine, which should hit an annualized run rate of 5.5 million metric tons by the end of the first quarter. Other potash producers are stepping up as well. But because of this shortfall, this is why I liked Mosaic shares over the past year, and I still like them, even though they recently hit new 52-week highs. Prior to Russia's invasion of Ukraine, there was already a potash shortage that sent prices to 13-year highs. But since the invasion, wheat prices, which, the United States and Canada are major producers, have hit their highest level since 2018, right? So higher prices mean farmers plant more because they want to take advantage of those prices, which then drives up the cost of fertilizers even more.
Everything is connected.
So in the fourth quarter, Mosaic reported, total net sales jumped 58% to $3.84 billion, and it had earnings of $1.95 per share, right? Those are pretty good, but it was a little shy of expectations. It pointed the finger at labor shortages in North America, as well as supply chain constraints and weather slowing kind of the pace of deliveries. But it did say that the potash and phosphate markets would remain tight well into the rest of 2022. Now, this is exacerbated by Russia's attack on Ukraine. Russia is the world's largest supplier of nitrogen fertilizers. Ukraine is a major producer of fertilizers. And, Putin's, sort of crony ally, Belarus, well, that country accounts for 20% of the global supply of potash. Well, in December, the U.S. imposed sanctions against Belarus's, potash imports with contracts with the country's sole exporter having to be wound down by April 1st of this year. Now, those sanctions are unrelated to the current Ukrainian conflict. They were imposed due to political crackdowns in the country. Sanctions imposed against Russia and Belarus only tighten the market.
Where are those? Stop it. These are my Spanx. They hold everything together.
That means companies like Mosaic or even Canada's Nutrien and others, they benefit as their sales skyrocket. So look past all the volatility caused by Russia's invasion of Ukraine. There are still a lot of really great, solid companies out there that are hitting new 52-week highs as the market whipsaws from highs and lows. And these are the companies that you really want to target, not only when times are good, but also when times are bad. Well, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. Thanks for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's to high returns.